joined here also by Tala Fakra. Those of you who know her will know that she's also from Bahrain. She says it only took her 15 minutes to get here by foot. You walked here this morning.
I did, actually.
You're lucky. Some of us that do fly and get up early in the night. I also know that you've been successful just now at launching the wage protection system in Bahrain. Those of you that are not from here, that means that 500,000 people are getting their wages paid electronically, no longer in cash, which obviously is a great platform for financial inclusion. So the question I have for you is, what does a fully functional financial system look like for the many migrant workers that you also have here in Bahrain?
Let me just run you through a little bit of what we did with the wage protection system. So that was a joint effort with the central bank and with the labor market regulatory authority. As you mentioned, 500,000 people here are paid primarily in cash. And that cash immediately gets remitted back to their home countries. And in that sense, both Bahrain and they are losing out. They, because they have nowhere safe to store their money, and so they fall victim to people who, they take their money back home to the labor camps. They may get robbed. There may be predatory kinds of practices going on. If they remit it all back, then they are sending it to someone, and they have no ability to control what happens to it on that end. So it's not in their name, it's not their bank account, even though it's the fruits of their labors. And so we didn't feel that that was fair, and the central bank was very accommodating in helping us to change the regulations, as Justin said, to ensure that this is no longer the case. So they are rolling out the system now. Obviously, there are technological and other implementations. But today, a migrant worker will have either a bank account in his name or an equivalent mobile bank account or a payroll bank account. And in that case, that person will be able to send money to another person. He will be able to store money in his own name. And I say he advisedly. There's a reason for that. Most of these migrant workers are male, although this will eventually also apply to domestic workers, which are female as well. So hopefully that will go some way to addressing the imbalance of the sexes we have here. And every other way, he'll be able to use it as legal tender to buy things. He'll be able to top up his minutes on his mobile phone. He'll be able to exchange in bank transactions. And we feel this is very important. I understand and I hear the concern that Justin had about pushing credit to people who don't really understand it and don't know what it's for and can't handle the implications of it. However, I would just say to that, people have always been able to find credit when they need it. And sometimes they get it from loan sharks, and sometimes they get it from unscrupulous people. At least in this way, there is competition, there is a tracking mechanism, and the government has oversight of this and can stop any unsavory practices. So I think that's...
Thank you. And Tala, it strikes me you used the word he advisedly. I don't know if anyone has wished you or everyone else in the room, it is International Women's Day today. So
thank you.
Congratulations.
Yay, girls.
Emil,
not so bad.
You join us from Jordan.
From Jordan.
Your background is that you're a venture capitalist.
Correct.
I have sympathy with you. Yeah. You're one of the first venture capitalists in the region.
Yeah.
In 2005. I have a question for you. In Jordan, you have more than 1 million refugees, 1.4 million refugees, and they earn very little. I think the average is lower than $3 a day. Is financial inclusion the first priority here, or is it more basic than that? That you need something else to be in place first?
I think the experience in Jordan has taught us a lot. I mean, first of all, it's not just about refugees, but it's about the host communities as well. And how do you leverage financial inclusion or financial security or financial health to grow whole communities, irrespective of where people are coming from. And I think it's a challenge for everybody. It's a challenge for everybody in this room, right? It's a challenge for everybody in the industry. I mean, Justin gave us a lot of statistics. Not a lot of them point upwards for the region. I mean, it's a shame. It's the best word that I can use to describe why we have the lowest level of financial inclusion as per the rest of the world. I mean, it's something for us to collectively really think about as an industry. And when I think about refugees and host communities, and I think about the contrast with ourselves, I mean, the first thing that came to mind as you were talking was, you're either busy being born or you're busy dying. And it's very clear that when I'm looking at refugees and host communities, they're busy being born. These people, they're pulling themselves out of difficult situations across the board, across all of our populations. I was reading one statistic where 130,000 people a day are moving out of extreme poverty. So there's clear movement at the level of population. Clearly, people want to move upwards. I think the challenge I question myself with is, are we doing enough? That's a constant challenge when you're weighing all the absolutely fantastic things that we saw today, and then thinking about the basic needs of somebody looking for inclusion, right? I want to be able to do something as simple as open an account cheaply, efficiently. I want to be able to cash in and cash out. I want to be able to transact. I want to be able to save for a rainy day. And it's going to be interesting to see where these solutions come from. When it comes to refugees and host communities, I think what Jordan has taught me is that it requires a partnership. The central bank in Jordan has taken it on. The private sector is actively looking at building solutions, and people are trying to figure things out. And I think what's interesting is it's not a one bullet solution. There isn't the one startup that's going to solve everything, or the one financial institution, or the one regulator. It's more about how do we create an environment that allows everybody to coexist, to work together, tackle the challenges of cost, and get more people into the system. I have no clue if I answered your question, but I was moving in that direction.
Towards the end,
Okay.
It's not just about financial inclusion.
Right.
Yes.
Yeah, and there's Nasreen Barakat here from Her Excellency, from the Ministry, from the director at the Central Bank of Jordan. I think learning about what Jordan is doing, they just launched 4 or 5 days ago with the Bill and Melinda Gates Foundation, Mobile Money for Resilience. It really emphasizes this, this element of creating resilience within communities, because we live in a region where shock is a norm. So us migrating our state of mind out of always fearing shock and instead embracing shock and moving forward is something that's critical.
Thank you. Justin, I'm going to come back to you. I want to speak about technology. Now, we know technology improves at the exponential rate. The good old Moore's law says every 2 years, processing power doubles and storage capacity doubles. But the sense I get is that somehow financial inclusion is not proceeding at the same rate. Why is technology already enabling us these solutions, and yet somehow the business models or the regulation isn't following? What's your sense?
I'd say there's two things here. I think one is as we touched on around regulation, that many countries, there are a number of countries that have done extremely well by recognizing that a innovative regulatory regime can open up the potential for exponential financial inclusion. But many countries, and I think this is a particular challenge in the region, the regulatory regime has been slower to recognize the challenge, and the solution of technology and digital financial services can play a very major role. And I think particularly around mobile money in the region, that's been a major challenge, that having regulation in place to allow mobile money to, first of all, operate, and secondly, to operate in a manner that is actually attractive for population to use. That's a fundamental challenge. I think another aspect is around, if you're talking about the provision of financial services to the most vulnerable, historically that's been done by community organizations, by in the region, by the Jama'iyat, the community savings groups, or in Africa it's the village loans and savings associations, or the microfinance institutions that have historically been run as charities, as non-governmental organizations. And I think the challenge there is those well-established multi-generational models have been entirely operated in a non-digital world. And getting those institutions have a high degree of trust with local populations, because literally they are the only community banking or financing facility that the village has. So I think that's a challenge, that the current models at the last mile are not fit for purpose when it comes to being for technology. And is it that these systems are going to be completely disrupted and fintech providers are going to come in and take their customers? Or is there going to be hybrid models coming where microfinance institutions and jamayats and village loans and savings associations go digital. And I think we're starting to see that second model as probably the more likely. And we're seeing some really interesting models in Ethiopia, Uganda, for example, of these community savings associations that are now putting the whole model onto a mobile application. It does exactly the same job within the same principles and the same community values, but it's fully digitized.
Thank you, and I'd like us to explore the regulation a bit further. But first, Tal, I've got a question for you. We spoke earlier about the number 0 and who invented that, and it's a bit controversial. And chess was mentioned here. Who invented banking?
Well, I mean, there's definitely a school of thought that says that we did, the Arabs did, as part of the Islamic Empire. As it expanded more and more, it became necessary for you to be able to store value. As your caravan moved from Mecca to Damascus on to Tehran, you had to have a place where you could buy and sell money and exchange money. The Arabs invented banking, and yet we are now the lowest area in the Middle East that is banked.
So why is that?
Well, I wish I had one answer for you. I think the central bank in Bahrain is an exception to the rule. I do agree with you that some of the regulators have been either non-existent or have been overly firm in their regulation, and they have insisted on very many outdated things that have made technological advances impossible. Until recently in Bahrain, with the development of the WPS, we had, for example, face-to-face KYC, which means that you have to physically go into a bank, sit there with your 2 forms of ID. A bank employee has to certify that you are who it says you are on those forms. And this all takes time, this all takes money. Now, and we have the infrastructure. The infrastructure exists in Bahrain and in the rest of the MENA region. We have national ID cards. They have biometric facilities on them. There's no reason for this cumbersome, friction-filled kind of interaction, and yet it exists. It's on the books.
Face-to-face KYC. I think we are privileged to be sitting here in a panel where we can actually speak directly and authentically. We have regulators in the room. If you each had to mention one thing that regulators could do better, we're going to get to business as well, but what would that be? Face-to-face KYC?
I think from my side, more work on the sandbox. Having that safe environment to test innovation and to not be scared of new models, disruptive models that can actually have game-changing potential. So I think the sandbox space is really important.
Sandbox.
I mean, just using the sandboxes as an example, where you hear a lot of companies that go through sandboxes, 2 years in, they're going nowhere, not because of lack of innovation or lack of teams, but too slow in actually embracing the regulations and processes that will actually allow these companies to flourish. So, I'm a believer in eradicating mediocrity. So if I had one message to regulators, I would say, look at your teams and optimize decision-making capability, educating themselves to be active ecosystem partners and active ecosystem builders. There's a lot of great ideas. There's a lot of, and everybody looks at it from a different vantage point. Government is exceptional at innovation. Where the slowdown I have seen happens is in the execution. Of these policies. Somewhere along the way, it just gets heavier and heavier and heavier and more frightened and more scared as it goes downwards. So I'd say eradicate fear, eradicate mediocrity.
I'm going to throw open questions to the floor just now. I'm going to ask you one more, Emil, and that is, why does it matter? Why does financial inclusion matter? And then maybe, if I can add on to that, do you see anything out there that gives you hope, being a cynical venture capitalist?
Yeah, look, I think why does it matter, because I think we live here. To me, it is all about changing our mindset in terms of understanding within a long-term perspective of where the opportunity lies for our youth and for our economy. And more time we take in integrating people into our systems and giving them a chance to protect themselves from uncertainty, the more insecurity we're giving them, and the more we're slowing down their progress and development, when actually we need all hands on deck to build this region. I mean, 350 million is not enough to build all that we need to build, is not enough to fix all that we need to fix on one level. On another level, I really think, and I keep saying this, but we really are in a golden era of entrepreneurship. This is the time. if we seed this opportunity, others are going to take it from us. You know, we've invested into US companies, we see the movement of Asian companies. If we don't see the potential our markets are giving us, and if we don't see the opportunity that it's providing us, believe me, others will come and take this opportunity from us, and we'll stay in our place for another generation.
Are there any questions from the audience? Thank you, sir. If I may just ask you to identify yourself and also to whom you're posting the question.
Thank you. My name is Vlada. I'm coming from Bank Sahara, Oman. My understanding is that most of the countries and governments in MENA region, and particularly in GCC, are coming up with goals or some kind of timelines for financial inclusion. Is there something like that in Bahrain? And if yes, how realistic or how ambitious is it?
Obviously, the WPS system was the first step in that. The central bank has identified financial inclusion as one of its key goals. I'm not sure, maybe that one of the central bankers here will know the exact number, but I do know that this is something we aim towards.
Thank you. Any other questions? We have one at the back there.
Hi, so my name is Mustafa Dhafar and I come from Bank Sohar, Oman as well. My question is, how could traditional banks collaborate with fintechs to ensure greatest financial inclusion?
Look, I think, so I'll start off and we'll hand it around. I think it's a great question. And, you know, our experience has been, you know, from our own portfolio is that partnership with established financial institutions is critical to the growth of startups. I think it does two things. One is it allows them to scale more efficiently. So as an example, Lua, you know, banks lend on the Lua platform. So banks have partnered with Lua because they cannot reach this segment of the market, right? At the same time, allows Lua to be able to grow, optimize its cost, reach more people. So that's one area. Any form of partnerships that embrace startups, I think the beauty that I've seen for banks or larger financial institutions is it changes the culture within the organization itself. I mean, the biggest challenge I've heard from CEOs of banks is that how do I get that culture into my own teams? How do I get that excitement coming in? How do I build that capability internally? I think by exposing them to startups, through working with startups, you're enabling that to happen. I think my experience has been it's a definite win-win in any way you look at it. I mean, another aspect is learning about product design and learning about what customers really want. Learning about messaging. I mean, one of the things that startups do exceptionally well that I have seen, right, is in appropriate messaging to acquire customers, right? They're thinking in a fundamentally different way. From a cost perspective, they're probably acquiring a customer at 1/100th the cost. So I think in the evolution of a startup and in the evolution of a financial industry, of a larger financial institution, there's synergies all along the way. I mean, you just start by partnering and it becomes muscle memory. I mean, you know, there'll be resistance, but, you know, as trust is built, and especially if you're a first mover as a financial institution, other startups will start coming to you. And suddenly you'll find you're working with, you know, with your pick of startups in terms of moving financial inclusion forward. I don't know if I answered your question.
Yeah, I mean, I'd agree with Emil on the first point that it's a kind of get-out-jail card for banks that claim to do SME lending. That it allows them to basically do what they say they do, but through a partnership that is far more effective and relevant to the needs of SMEs. I think a second point, particularly when it comes to the financial inclusion space, there's a great opportunity. A lot of larger banks have active CSR programs where they're trying to address financial inclusion issues through CSR, corporate CSR donations, or in terms of Islamic bank, through zakat or sadaqah structures. I think there's a great opportunity for CSR 2.0, which is actually saying there are far more effective ways that a bank, it may not have the capability to perhaps ever serve that sector, but through partnerships or even through actually investing in social enterprises, they can serve a market segment that they want to serve with their head, if not their heart, their heart, if not their head. So, you know, we're just starting an engagement with a large Islamic bank in Southeast Asia that is very much focused on this. They've been doing CSR programs for the unbanked for many years, but now they're saying, actually, could we look at this by investing in a social enterprise that could actually then provide digital financial services for the unbanked?
Thank you, Talabi. First, our time is up, but I think it's only appropriate given that it's International Women's Day and we have a local finish.
And we talk too much as man.
You want to give us a few more minutes? So can I hand over to Tola and then we'll have one final question.
I'll keep it brief. I just wanted to point out that in Bahrain, depending on the definition of SME, 99% of the companies, the private sector companies in Bahrain are SMEs. So it's crucial that we find a way to serve this segment, and it's crucial that the banks find a way to get money to them, and if they can't do it in the traditional way, then a partnership of this type has to be involved.
This question for Tala. Bahrain and EDP in particular, LMRA and Central Bank of Bahrain recently encouraged this wages program, and it's been extremely successful. A lot of vendors has submitted, and about 4 companies been selected. As we know, wages program, it will only work and be successful if we have regulations. Vendors are actually trying hard to attract corporate companies to introduce the wages program. And quite honestly, this is extremely very slow startup. You know, it's been difficulty. What are the plans of EDP or government here to increase awareness among, say, small companies or corporate to introduce the wages program? And especially if I understand the vision of government of Bahrain to cascade that the wages program to all domestic helpers in Bahrain. So what you doing about it? I mean, the vendors have the solutions, but I feel you have produced in this program, but it's very slow start.
I'll answer half your question first. So I'll start with the how are we going to educate the people who are actually going to be using it, the smaller companies, the cold stores, the laundries, the people who sell you milk. We have started the program by implementing it with the larger companies with 1,000 employees or more. These people, we start with them because they do have a significant expat population. I'm talking about the construction companies, for example. But they have payroll staff, they have HR staff, they have finance staff. Once we start it there, we work out any teething problems with the IT systems and so on, then we'll bring it down to the level of the smaller companies. There is a large effort on the table now with the National Communications Center to roll this out. This is in conjunction with the work that they'll be doing on the VAT, which, as you know, is coming soon. So they'll be needing to explain to these companies that not only do you now have to pay your workers electronically, by the way, you have to have electronic systems anyway, because from now on, you're going to have to be paying tax. So there's a whole batch of messaging that needs to be worked on. You're right, this is our biggest problem. And this is the biggest way that this program can fail. Because the technology is there, the companies that are vendors, they've done this in other jurisdictions. AFS, for example, has done this in Dubai and Qatar and other places. So everything else is a known. The only unknown is how the private sector will take it. But we have to just take each day, one day at a time, and do our best.
Tola, Emil, Justin, not Justine, thank you very much for joining us. It's been a pleasure. Thank you for listening to us.